for our webinar on insurance for Hawaii natural disasters. My name is Kim Sakamoto, and I will be moderating today's webinar. I am a Senior Sales Account Manager in the Personal Lines Department here at Atlas Insurance, and I've been in the industry for 12 years. I'm happy to be here to present our first webinar with you all. I'm very proud to be a part of Atlas Insurance, as we recently received the honorable distinction of being the only Hawaii-based company ranking in the top 100 independent property and casualty agencies in the US. Today, we have a variety of people here in attendance, from our current clients to our mortgage brokers. We appreciate all of you being here with us today. Our speakers will be talking about hurricane, earthquake, and flood insurance, and also going over policy features and some tips for you and your clients. Before we get started, I wanted to go over the housekeeping rules. The audience will be in a listen mode only, and everyone will be muted throughout the webinar. We'll be addressing questions at the end in the Q&A. You'll be able to submit questions using the chat function at any time during the presentation. Shane Choi, who is part of our personal line sales team, will be here helping us with the questions that come through. Thanks, Shane, for being here today. To our current clients, please direct any personal policy inquiries or claims-related questions to our service team. They will be able to provide you with personalized attention to your concerns. The email is at the bottom of the slide as well as in the chat box. Well, I am really excited to have a few of our members of our personal line sales team here, speaking about some of the natural disasters that Hawaii is exposed to. This webinar will help you distinguish different types of insurance coverage needed to protect your most valuable asset, your home, as well as getting a better understanding of the options that Atlas Insurance has to offer. First, I'd like to introduce Todd Tomorry. Todd is our personal line sales manager. He joined Atlas last year and has been in the industry for 18 years. Tired of a sell-at-all-cost approach, Todd credits Atlas' philosophy of valuing the client and addressing both their short and long-term needs as his motivating factor for his move. First specializing in auto insurance field, and now property insurance for the last 9 years. I'd like to turn it over to Todd, who will be presenting on hurricane insurance.
Thank you, Kim, and I want to thank everyone for joining us today. Again, my name is Todd Tomorry, and I'm happy to present the hurricane portion of our webinar. Before diving into hurricane insurance, I wanted to start with some basic information about hurricanes and their impact in Hawaii's history. Just last month, Hurricane Douglas gave us all a refresher on terms like cone of uncertainty and wind shear, as well as a clear reminder that our state is currently in hurricane season. The full window of the Hawaii hurricane season runs from the beginning of June through the end of November, with August and September traditionally being the peak months of activity. While it is possible for a hurricane to form at any point in the year, this hurricane season represents the time period of highest hurricane activity due to the warmer water temperatures that can fuel the formation and endurance of a storm system. So going back to Hurricane Douglas, we were all very fortunate that it did not make direct landfall, although it did give us a close call and was unique in its track, continuing northwest along the entire island chain, while surprisingly maintaining its strength and wind speed. Unfortunately, our state has not always been so lucky, as the pictures on the following slide show examples of hurricane damage throughout Hawaii's history. In November of 1982, Hurricane Eva caused extensive damage to Oahu, Kauai, Niihau, with wind speeds of up to 120 miles per hour. If we could go over to the next slide, please. The total $312 million of damage included my own family's home in Kaneohe, as we sustained roof damage as well as blown-in windows. At the time, Hurricane Eva was the costliest hurricane to affect Hawaii, and that remained the case until the arrival of Hurricane Iniki in September of 1992. Iniki was initially on a path towards Oahu, but veered unexpectedly and ended up hitting Kauai with wind speeds up to 145 miles per hour and wind gusts of up to 225 miles per hour. All told, Iniki caused an estimated $1.8 billion of damages, and played a huge part in changing Hawaii building codes to require new homes be built with hurricane clips to better safeguard against roof uplift. To date, Iniki remains the most powerful storm to make landfall in Hawaii history. The third picture on this slide shows damage from Hurricane Azelle in August of 2014 as it hit the southern point of the Big Island. A large amount of the damage was caused by falling of albizia trees due to its weak trunk and limb structure. Though downgraded from a hurricane to a tropical storm before it hit, Azelle remains the strongest tropical cyclone to make landfall on the Big Island. So the information on the following slide comes directly from the Central Pacific Hurricane Center website, showing the hurricane category starting at Category 1 and all the way up to the most powerful Category 5. The description to the right of each category gives an indication of the potential damage to expect based on the storm strength. I do want to make a quick note of the storm surge column on the far right-hand side, which references water from the ocean pushed towards the shore in combination with the normal tides. Even though this may occur during a hurricane event, water damage from the ground up would actually fall under flood insurance, and Karina Hill will focus on that line of coverage a little later in our webinar. For this particular chart, the main number I want you to focus on is the first number in the sustained winds column, 74 miles per hour. Scientifically speaking, this wind speed of 74 miles per hour is the demarcation line between what constitutes a hurricane as opposed to a lower degree windstorm, such as a tropical storm or tropical depression. To tie this into insurance, it should be noted that the standard home insurance contract does provide coverage for any natural wind damage that is less than a hurricane. Next slide, please. So the question becomes, what is the demarcation line between utilizing home or hurricane insurance when it comes to wind damage? Thankfully, the determining factor in this case is not wind speed. So please do not feel obligated to go outside during a hurricane to gauge the exact wind speed at the moment it causes damage to your home. Insurance-wise, the distinction between home and hurricane coverage is made by the following time frame for each particular storm event. As a storm approaches and is on track to potentially make landfall, the Central Pacific Hurricane Center will issue a hurricane warning for each individual Hawaiian island. The warning is normally issued 3 to 5 days before the storm is expected to make landfall with a specific island or islands. This starts a virtual clock on a time period where any wind damage would fall under the scope of a hurricane policy. This clock will continue running through the hurricane warning being lifted for each particular island and continues on for the following 72 hours, at which point this virtual clock stops. Again, any wind damage sustained throughout this entire window of time would fall under hurricane insurance. This window of time may be different for each island, as the timing of when a hurricane warning is both implemented and then lifted can vary island by island. This particular window pertains strictly to wind damage during the time frame, as home insurance would still apply for other covered perils like fire, theft, or plumbing leaks that may happen to occur during a hurricane event. So now that we know when hurricane coverage would apply, I want to touch on the determining factors for hurricane insurance premium. Traditionally, the main rating factors have been the age of the home and construction type, such as single wall, double wall, and superior frame. For those who are not familiar with the term superior frame, this refers to wood frame homes built 1994 and newer, as the building code was changed at that time to require single-family homes be built with hurricane clips attaching the roof of the home to the structure, as well as hurricane straps attaching the structure to the foundation. Another rating factor now being used for some hurricane carriers is the specific property location of a home. Areas of higher elevation with homes on a cliffside or hillside are thought to be more susceptible to high wind damage, so these locations may carry a higher premium than a similar home at a lower elevation. The following chart displays the potential variance between hurricane insurance carriers dependent on the different rating factors. The top chart focuses mainly on the rating factors of age and framing of home, as it compares quotes from 3 different hurricane carriers based on a single family home on Oahu and Ewa Beach, all using $500,000 of dwelling coverage for the structure. You can see there's not a lot of difference between the carrier premiums for superior frame homes. Again, these are the wood frame homes built 1994 and newer. The premium differences then widen when it becomes double wall framing, and even more so for single wall framing, where carrier A is actually less than half the cost of carrier B. The bottom chart displays quotes from the same 3 carriers, still quoting for a single family home on Oahu, and still using the same $500,000 dwelling limit. The difference with this chart is that it focuses on the rating factor of location. This particular set of quotes is for a location of higher elevation at the top of Halikoa Drive near Kahala Mall. While still on the same island as the location used for the top chart, you can see how one rating factor can change premium so drastically. Carrier A, which had the lowest overall rates in the top chart, is tremendously higher in cost in the second chart. This should show that the fact is there is no one carrier that can consistently provide the best rate for all rating factors. With this in mind, it's always recommended to consider multiple insurance carrier options to account for all the different rating factors involved. This is where Atlas Insurance can provide a huge benefit as an agency, as we have the flexibility to write through multiple carriers for each line of insurance. Rather than quoting through one constant carrier, regardless of the different rating factors involved, we look at all the variables for a particular home, find the best overall fit in terms of not only price, but coverage as well. This leads to my first and most basic hurricane tip, and that is to know how your carrier aligns with the rating factors we just touched on. It's also good to know the different insurance options available for hurricane insurance, as there are carriers who can write the home and hurricane coverage on one combined policy, and there are also carriers that write the hurricane insurance as a standalone option, separate from the home insurance policy. Beyond coverage and price, it is equally important to be aware of the insurance carrier's financial stability. You should have the peace of mind to know that your carrier will be able to financially withstand a catastrophic event and still provide the full amount of coverage when it is needed most. When it comes to coverage options on a hurricane policy, the main point to know is that most hurricane carriers only require the dwelling coverage protecting the structure of the home. This means coverages of other structures, personal property, and loss of use that are automatically included on a home insurance policy are normally optional coverages for hurricane insurance. A common misconception is that people assume the personal property coverage shown on their home insurance policy will carry over to the, if needed, following a hurricane event, and this is simply not the case. When filing a hurricane claim, the only coverage to apply will be the specific coverage named on the hurricane policy. So if your hurricane policy lists only the dwelling coverage, there will be coverage to repair or rebuild the home, but nothing else. For this fact, it's always recommended to at least consider carrying enough personal property coverage on your hurricane policy to cover main essentials needed for day-to-day living, such as furniture, appliances, and clothing. While a car can be considered a necessity, it would not be factored under hurricane insurance, as damage to a car during a hurricane would still fall under the scope of auto insurance. Last but not least, when it comes to coverage, there is a specific endorsement I want to highlight today called economic demand surge. This is an add-on or endorsement that can commonly go overlooked when it comes to hurricane insurance, but it can be a great source of coverage in a hurricane claim as it is tied in directly to the concept of supply and demand. So full disclosure, I'm a huge Disney fan, so I had to find some way to incorporate that into my presentation. And thankfully, I was able to find a relevant way to do just that, tied into this particular concept. So what you see here are 2 pictures pre-COVID, of course, showing the same location on Main Street at Disneyland, but at opposite ends of the spectrum in terms of crowd size. For this analogy, I want you to imagine the shops along Main Street represent different contractors and construction companies. The top picture is representative of supply and demand following a home insurance claim like a fire. The family or small number of families affected in that incident of the fire would have a relatively easy time choosing from all the available options for contractors to repair or rebuild their home. The bottom picture is representative of the supply and demand for contractors following a hurricane, as the potential damage would be much more widespread. The dense crowd in the picture represents the large amount of families needing to fix their homes all at the same time. To give you some context, Hurricane Iniki completely destroyed roughly 1,400 homes and also partially damaged an additional 5,000 homes on top of that. A surge of that size can and did overwhelm the construction market, causing construction costs to rise as a result of needing huge amounts of materials and labor all at once. So this is where economic demand surge comes into play. This endorsement can extend the limit of the dwelling coverage on a hurricane policy by 15 to 25% in order to account for an increased cost of construction following a hurricane. Sorry about that. So again, using a $500,000 dwelling coverage as an example, a 25% economic demand surge endorsement would provide an additional $125,000 of coverage on a hurricane policy to account for the inflated construction costs brought on by the sudden change in supply and demand following a hurricane. So finally, I have a mini scavenger hunt assignment for you all. Since we all need to stay indoors at this time, especially those of us on Oahu, I do encourage you to make the effort to search and dig for your hurricane policy. Once you find it, dust it off and check to confirm you have this economic demand surge endorsement listed. Because in many ways, insurance is about protecting yourself from the worst case scenario, and this singular endorsement can go a long way in doing just that for your hurricane policy. Thank you all very much for sharing your time today, and please stay safe through these tough times. That concludes my portion, and I'll pass things back over to Kim to introduce our next topic.
Thank you, Todd. Just as a reminder, please enter questions into our chat box at any time. We're going to be addressing those questions towards the end in the Q&A. Next, I'd like to introduce Justin Salgado. Justin will be speaking on earthquake insurance and how this coverage is important in Hawaii. Justin brings 12 years of insurance industry experience to Atlas as a personal line sales account manager. He is a U.S. Air Force veteran and has received his degree in business management from Portland State University. Here's Justin presenting on earthquake insurance.
Thank you, Kim, and thank you everybody for joining us today. Again, my name is Justin Salgado, and I will be discussing the earthquake portion of today's segment. Let's first off start off with the definition of earthquake. Definition of an earthquake is a sudden and violent shaking of the ground, sometimes causing great destruction as a result of movements within the Earth's crust or volcanic action. Hawaii falls into three classes. First class being volcanic. This is the magma movement within or eruptions from present active volcanoes in Hawaii. We have Kilauea, Mauna Loa, Hualalai, Haleakala, and Loihi. They originate in the magma storage regions along the paths that the magma travels, as it moves upwards and laterally prior to an eruption. Such earthquakes, loosely termed volcanic earthquakes, are very important for volcano activity monitoring. The next class, we have our tectonic. This is earthquakes involving slippage along tectonic faults. Minor to moderate earthquakes up to a magnitude of 5. These occur in the crustal faults within the volcanoes. These are the most types of earthquakes we see in Hawaii. We have large flank earthquakes up to a magnitude of 8. These occur along the decalant faults which separate the ancient oceanic crust and overlaying volcanoes at a roughly depth of 5 to 6 miles. These are the most dangerous types of earthquakes in Hawaii since both large earthquakes and local tsunamis originate there. Lastly, we have our mantle. This is the flexing or bending of the Earth's crust and upper mantle, known as the lithosphere. Due to the weight of the islands above, this is the most common source of damaging earthquakes north of the island of Hawaii. And this type of earthquake generally occurs more than 12 miles below sea level. Now, although we have these three different classes of earthquakes that we have in Hawaii, all classes will be covered on the same earthquake insurance policy. More about earthquakes here in Hawaii. Many of you might not realize this. There are thousands of earthquakes that occur each year in the state of Hawaii. Most are small and they can only be detected by sensitive instruments known as a seismometer. Some are strong enough to be felt on one or more of the islands. A few earthquakes are large enough to cause significant damage and impact residents across the entire state. Since 1868, more than 30 magnitude of 6.0 or greater earthquakes have rattled the islands. Now in 2006, Hawaii was struck with a magnitude of 6.7. It produced several aftershocks, including one that measured 6.17 minutes after the main shock. The Pacific Tsunami Warning Center measured a small, non-destructive tsunami 4 inches on the coast of the Big Island. Most severe damage was caused by the earthquake, was focused on the north and western sides of the island of Hawaii. Damage was quite heavy on the eastern sides of Maui, and minor damage spread all the way to western Oahu, which was 170 miles from the earthquake's epicenter. On the Big Island, many houses had large cracks and broken windows, and at least 61 were destroyed and red flagged by officials. All of the houses on West Hawaii had extensive internal damage, but most avoided significant structural damage. And the reason being is most of the buildings around the epicenter of the earthquake have been built in the last few decades and are well constructed. Even so, over 200 million in damages occurred. Now, according to the USGS bulletin in 2006, the probability of a destructive earthquake with a magnitude of 6.5 or higher striking the islands of Hawaii, in the next 10 years, we're at a 50% chance. So 4 years ago in 2016, we were at that 50% chance. In the next 20 years, we're at a 75% chance. And just 5 years from now, in 2026, we will hit that 75% mark. In the next 50 years, we'll be at 97%. In 2056, we'll be at a staggering 97% chance of a destructive earthquake striking our islands. So you might be asking yourself, do I really need earthquake insurance in Hawaii? I would tell you yes. You absolutely should consider obtaining earthquake coverage, as it's not a matter of if, but when a destructive earthquake will strike Hawaii. This is a great option to consider for the Big Island clients. Earthquake insurance does not cover any residual effects like a tsunami, volcanic eruptions, nor will it cover you for landslides or mudslide. Earthquake insurance covers damage caused by the specific event of earth movement. In Hawaii, we have a very limited market and we only have a couple options. We have a standalone policy with a starting premium of $1,000 per year, or by an endorsement with an ICAT hurricane policy, which has a more favorable premium. This policy matches the limits from its companion hurricane policy. It has a percentage deductible, and it's paid on an annual aggregate. Most common deductible seen on a earthquake policy is going to be 2%. By the end of 2020, we are expecting to have another standalone product available with some very competitive rates. In this last slide here, you'll see the premium variance is shown for the different premiums from Maui and Big Island. Frame types such as single wall, double wall, superior frame, and masonry. The coverage amount is $500,000 dwelling with a 2% deductible. In this illustration, you will see that Maui, the premiums for both Lahaina and Hana are identical. Single wall construction, $135 a year. Double wall and superior frame, $100 per year. And masonry being the highest at $190 per year. Now on the Big Island, you'll see similarities that the houses have on Kona and Pahoa. You will see that double wall and superior frame being the same, $520 per year. Single wall, $702 per year. And masonry being the highest at $998 per year. Now, based off of these figures, you can see that the premiums are not purely based off of the location on each island. However, it will be determined by the construction type and the amount of dwelling protection provided. Also in comparison, I have only provided coverages for A. However, if you select coverages A through D, as long as the hurricane policy that it mirrors contains such coverages. I would like to conclude my segment by saying thank you to everyone for being here today. I'll go ahead and pass the floor back over to Kim.
Thank you, Justin. Well, I know that there is a lot of information being shared here with our speakers today, and you probably don't remember or won't remember everything that was said, but don't worry, that is why we are here. As your agent, we can help you uncover your insurance needs. We understand the different types of coverages that are available, and we know our carriers well. We take it upon ourselves to find the best fit for you and your situation. You should reach out to your agent at least once a year for an insurance review of your policies. Our personal line sales and service teams work in collaboration to address the needs of our clients. So far, we have learned that earthquakes and hurricanes can cause major damage to our islands. One thing they both have in common is that they both can trigger a flood. Karina Hill will be going more in depth on this subject. Karina has been in the insurance industry since 2007 and has been with Atlas for 11 years. She has always had a focus on developing her education within the industry and has obtained 4 designations, including the prestigious CPCU. Throughout her career, she has provided numerous educational presentations to banks, mortgage companies, and realtors, sharing her expertise, knowledge, and experience. Here is Karina with flood insurance.
Thank you, Kim, for the introduction, and thank you to everyone for joining today. I am really excited to be here to discuss flood insurance and the importance of coverage. Let's start with defining what a flood is. Flood insurance, similar to earthquake and hurricane, has a specific definition in order for the policy to respond. And while this definition is lengthy, I will read it verbatim and provide my synopsis after. The definition of flood is a general and temporary condition of partial or complete inundation of 2 or more acres of normally dry land area or of 2 or more neighboring properties, at least one of which is your property, from overflow of inland or tidal waters, unusual and rapid accumulation or runoff of surface waters from any source or mud flow, or collapse or subsidence of land along the shore of a lake or similar body of water as a result of erosion or undermining caused by waves of water exceeding anticipated cyclical levels that result in a flood. Now, the takeaway from this definition is that in order for the policy to respond, it has to be 2 or more properties or 2 or more acres that experience flooding. And the reason behind that is because if it was just one property that has flooding, well, it could be of a structural or land issue. But if there are 2 or more properties that have flooding, Well, it's not of a structural issue, but an actual flood occurred and the homeowners can utilize their flood policy for coverage. Flood insurance does cover for heavy rains, rising waters, overflow of mud, and tsunamis. Flood insurance does cover the rainwater that comes with a hurricane. As Todd mentioned earlier, the rainwater that comes with a hurricane may not necessarily be covered under the hurricane policy, unless those hurricane winds cause the roof to break open or a window to break open, causing rain to come into the house from above. If there's any water from the ground up, that would not be covered under hurricane as it is covered under the flood policy. So now that we understand the definition of flood, let's take a look at the different flood zones and what their definitions are. Flood zones are determined by FEMA and they do have specific meanings on their location. The V zones are the most hazardous of the special flood areas. V zones generally include the first row of beachfront properties, and the hazards in these areas are increased because of wave velocity, hence the V designation. These homes are typically found in areas such as on the north shore of Oahu, beachfront homes in Lanikai, Kailua, or Kahala. A zones are the next most volatile of the special flood areas and are subject to rising waters, and they're usually near a body of water such as a lake, river, stream, or canal. Think of homes that are near the stream in Kalihi Valley, enchanted lakes in Kailua, the Hawaii Kai Marina, or even the Alawai Canal. A zones also have designations such as AE, AH, A99, and interestingly, they all have the same rates. The different A zones are named depending on the way in which they might be flooded. Properties that are in these higher risk flood zones, such as VE and A, are required to obtain flood insurance if they have a mortgage. X zones are minimal risk areas. These are the most favorable zones and the mortgage company won't require insurance. D zones are areas that have not been studied, but where flooding is possible. Also, mortgage companies do not require flood insurance for D zone properties. And the areas that I have seen the D zone determination are out west on Oahu, in Ewa Beach, or Kapolei. We now have a better understanding of the definition of flood and the different flood zones. Let's now move into the importance of flood insurance. Although there are designated flood zones, it's important to understand that regardless of what flood zone your property may be in, everyone is at risk for flood damage. The decision about whether or not to buy flood insurance should not be based on a line on a map, because where it can rain, it can flood. And living in a tropical paradise doesn't mean it's always sunny and dry here. Hawaii is known to have a lot of rain and rain that can flood our communities overnight. We have seen it numerous times across the state where we have experienced significant flood damage. For example, do you recall in 2006 when we had 40 days and 40 nights of rain and the Kauai Dam, the Kaloko Reservoir, broke, causing devastation on the island of Kauai? Unfortunately, the dam burst was preceded by unusually heavy rain. The flood from the dam failure raced downhill through a ravine with 400 gallons of water and a wall of water reported to be between 20 and 70 feet high and 200 feet wide. Unfortunately, the flood did destroy several homes and killed 7 people. More recently, we had Hurricane Lane in 2018, and Hawaii County officials say damage from the flooding caused by the hurricane's torrential rains totaled about $20 million. 152 homes were severely destroyed and 29 sustained major damage. Hawaii Island received an average of 17 inches of rainfall with a 4-day single station maximum of 57 inches, making Hurricane Lane the wettest tropical cyclone ever recorded in Hawaii. Now back in 2000, November of 2000, Hilo experienced one of the greatest floods in Hawaii's history. It was caused by an upper level low and the remnants of Tropical Storm Paul, a weak and short-lived tropical cyclone. The Red Cross indicated that 33 homes and apartments were destroyed as a result of the flood, and another 265 sustained damage. That flood led to $70 million in damages, and today in 2020, that equates to $104 million. So while we may have been lucky with hurricanes dodging our islands over the last 28 years or so, you can see rainwater from any storm can cause significant damages across the state. As I mentioned earlier, it does not matter what flood zone you are in. Everyone is at risk for flood damage. Did you know that 80% of the claims that are filed with FEMA are from the low risk zone X, and that just 1 inch of rain costs on average $27,000? A new nationwide flood modeling tool is available. The new combined model estimates that over 14 million homes and other buildings throughout the country face a 1% annual risk of flooding. That's about 1 in 10 properties countrywide. And this figure is projected to grow during the next 20 years. In contrast, only 8.7 million properties are identified as high-risk properties in the FEMA flood maps. This new model reinforces what we have known all along. Far too many homes across this country need flood insurance. But why don't homeowners in these low risk X zones obtain insurance if the risk is actually greater than expected? Well, it could be for a couple of reasons. It could be because since the mortgagee does not require it, the homeowner may feel that the risk isn't important enough to insure. Or perhaps they aren't even aware that flood insurance is available. And lastly, maybe they feel the cost of insurance is too high. And while that may have been true in the past, I am really excited to announce a new private flood market that is by far more competitive in coverage and pricing than the NFIP FEMA policy. On the next slide, you will see a comprehensive comparison of the policies with FloodGuard and the NFIP. I will highlight a few of the differences, but I wanted to include all of this in the presentation for you to reference afterwards. With the NFIP, an elevation certificate may be required, which is costly and time-consuming for a homeowner. But with FloodGuard, no elevation certificate is required. And one of the greatest differences in coverage is the amount that we can offer for the dwelling. With the new FloodGuard policy, we are able to offer coverage up to $1 million, while with the NFIP, we can only offer up to $250,000. And we all know that a single family home in Hawaii cannot be rebuilt for $250,000. So clearly having more coverage available is a benefit to our clients. In addition, the FloodGuard policy offers up to $500,000 in personal property coverage, while the NFIP maxes coverage at $100,000. Another great coverage with FloodGuard that the NFIP does not even offer is loss of use coverage. FloodGuard offers coverage up to $50,000. This will provide additional living expenses should the homeowner have flood damage and they need to stay in a hotel and they incur additional living expenses while their residence is being repaired. On the next slide, I wanted to highlight some additional features specifically for Hawaii. We have annual premiums as low as $200. Payment plans are available, while the NFIP, the policy has to be paid in full. In addition, and this is really great for all of our loan officers listening in, we can bind coverage and provide the deck page without collecting payment up front. With the NFIP policy, the client needs to pay the first year's policy upfront in order for us to provide a deck page at closing. While with FloodGuard, no payment is required to start. And while FEMA has continued to raise their rates every April, we have not been subjected to that with FloodGuard. The coverage and various options with FloodGuard is really amazing, but I think you will all be blown away by seeing the price comparisons between the two. I did comparison quotes for a single family home with the same limits the NFIP offers. $250,000 for the dwelling, $100,000 for the contents, and a $5,000 deductible. I compared each of the coverages to the most popular flood zones we see in Hawaii: VE, AE, X, and D. Now you're going to see that the biggest impact on premium savings will definitely be seen in the highest risk flood zones, V and A, while X and D don't see a huge premium difference, but it does still come in less expensive than the NFIP. So let's take a look at this chart and start with flood zone VE. With the NFIP, the annual premium was $18,667, while with FloodGuard, it was only $5,682. That's almost a $13,000 difference over the year. Next, we have the AE zone, and with the NFIP, the premium was $11,764, while with FloodGuard, it was only $2,708, and that was a difference of $9,056 over the year. Huge savings. Now with D and X, the D you see a difference of $69, and the X zone you're going to see a difference of $53. So this is a fantastic product that we have for our Hawaii homeowners. It provides broader coverage, easy binding, and huge savings. And lastly, I would like to conclude the flood portion with an announcement that there will be flood map changes on Kauai at the end of this year. FEMA has determined the Waimea and Hanapepe levees on Kauai do not provide a high level of protection and are to be de-accredited. New preliminary flood maps effective in 2020 show areas behind the Waimea and Hanapepe levees to be in a high-risk flood zone. Approximately 400 parcels in Moloa'a, Waimea, and Hanapepe are having a new high-risk flood zone designation, where these homeowners with a mortgage will be required to buy flood insurance when these revised maps become effective. And you can see the flood map changes on this slide. On the right, you can see how many more of those properties are going to be mapped into those higher risk zones. So I really encourage you to have yourself, your clients, neighbors, families, and friends to reach out to one of us at Atlas and see how we can help save money and obtain better coverage with our new private flood market. Thank you so much for joining today, and I'm going to go ahead and hand it over to Kim.
Thank you, Karina. Well, I would like to thank all our speakers today, Todd, Justin, and Karina, for their time here with us and providing the audience with more information on the different types of insurance coverage. They are just a few that make up our personal line sales team. We have a total of 8 sales agents with over 75 years of experience combined. Our main office is located in downtown, and we also have offices in Lihue and Maui. Any one of us will be happy to help you. It is very important to have an agent to help you navigate the best combination of products, service, and price. We have over 30 insurance carriers, both locally and nationally, that we are appointed with. We can insure almost any type of risk, such as an older home, luxury homes, vacation rentals, waterfront properties, even lava zones, and so much more. Atlas Insurance is the largest agency in Hawaii and has over 90 years of history helping its people. To our loan officers and realtors that have attended, we value your time and we know how time sensitive a loan closing can be. We are able to get a binder to you within an hour. We want to make sure that our clients are educated on their coverages and properly covered. We provide our clients with peace of mind knowing that their insurance needs are met. And now I want to just turn it over to Shane, where we can answer any questions from the audience. Shane?
Thank you so much, Kim. Aloha kākou, everybody. Welcome to the question and answer section of our program. Thank you so much for joining us today. But a quick reminder to any of our clients to please direct any individual policy questions or concerns to our service team, and I'll again include the email in the chat box. So we've monitored the chat box for any questions that you have, and we'll do our best to answer any and as many as we can during this session. So the first set of questions goes to Todd. Todd, we had a question come in that was asking, what is the best way to determine the financial viability of a provider? Todd?
Thanks, Shane, and thank you all for, again, joining in your questions. This really is a simple way to do this is to reach out to your agent. Feel free to do so. we do make it a point to highlight that when we work with our clients and different proposals. So the easy answer is to just reach out to your agent. They should have that information about the carrier they're using.
Thank you, Todd. Another question that came in was, why should I get hurricane insurance or any type of insurance if I live in a condo?
Yeah, excellent. So when it comes to condos, a little different from single family homes because you do have an association involved, and that association has a master policy covering perils of fire, plumbing leaks, as well as hurricane and flood insurance. But keep in mind that policy or coverage provided by the association pertains only to the original construction of the home. So there is still a huge benefit to getting an individual hurricane or flood policy or earthquake coverage as well, because it will protect, it would basically pick up where the association coverage leaves off, and it'll cover renovations or upgrades done to your particular home, as well as your personal belongings and living expenses following, again, a hurricane, earthquake, or flood like a tsunami.
Thank you for that detailed explanation, Todd. And another question is, what hurricane carriers do you or do we have within our market of insurance?
Yep. So again, Atlas as an agency, we have great flexibility with carriers looking through different options. We write through Palomar Insurance, Zephyr, ICAT or Centauri. We also have GeoVera and Coastal Select as standalone options. And then we do have carriers that write the combined home and hurricane together. We can write that through Island Insurance, DB Insurance, RLI, and First Insurance.
Thank you for answering that, Todd. And the next question is for the earthquake portion of our program. And this one goes out to Justin. Justin, one of the questions is, can earthquake be added to the hurricane policy at any time?
Great question. Yes, unlike other carriers, you could actually add it on anytime, as long as there's not an active moratorium in place.
Thank you. Next question for you is, does the type of earthquake make a difference in how an earthquake policy will cover my home?
Great question. All three classes that were described in my portion, although we do see different types of earthquakes that appear or can be happening, they're all going to be under one filed class as earthquake. So regardless of how it comes about, earthquake is covered under earthquake.
Thank you, Justin. Another question. Does someone need earthquake coverage or insurance if they live on Kauai?
Another great question, Shane. I kind of skipped over, the illustration that was on my previous slide, but as you see in a normal year that they are pretty scattered, and the earthquakes can be seen as far as Kauai. Now, chances are very limited. Primarily, your focus is going to be Maui and Big Island, of course, but you should definitely consider it as it may still happen.
Oh, okay. Well, on that line of thought, why is there a premium difference between the different islands?
Premium differences between the island is more heavily concentrated to, again, Big Island, and then, of course, Maui being adjacent to. Predominantly, Hawaii is going to have the higher premium just due to the fact that most of the active volcanoes are surrounding that location. It is a higher risk, but still, in comparison to a standalone policy, the premiums are still coming out much less than that standalone if you were to add it on to your hurricane policy.
Thank you, Justin. So we're moving on to the flood section of question and answer, and this is directed to Karina. Karina, some of our lenders, they're wondering, does a private flood policy meet the compliance of a federal funded loan? Could you answer that for us?
Absolutely. Yes, the private flood market does meet the compliance that the mortgagees have in place, and we do have a flood compliance letter that we are able to provide should a lender request it.
Thank you. For some of our lenders and realtors, they are also wondering, can a flood policy be transferred to a new buyer?
Well, the answer to that is yes and no, and that depends on where the flood policy is placed. With the NFIP, yes, the flood policies can be transferred from the current owner to the new buyer, and there's steps involved to have that done. But with Flood Guard, no, the policies cannot be transferred. The new buyer would need to purchase their own policy.
Thank you. And this is another question that a lot of people have heard of, but they're not sure what it is about. Well, what's a elevation certificate and how is it possible to get one?
That is a great question. The elevation certificate is required in order to properly rate post-firm buildings, which are buildings constructed after publication of the flood insurance rate map. And those are the buildings built after December 31st, 1974. The elevation certificate is not required for pre-firm buildings, which are buildings built before December 31st, 74. And a licensed land surveyor are the ones who complete the elevation certificates, and depending on who the homeowner chooses to use, the cost can be between $500 and $850.
Thank you, Karina. We also had a question come in from our audience. It was, they said, I have heard that FEMA coverage must be applied before individual flood policies. Can you please clarify how FEMA or national coverage is involved and which is primary?
I think that this is asking about excess flood coverage. So prior to us obtaining Flood Guard, the only option that was available was the FEMA policy that maxed the coverage out at $250,000. Beyond that, there was excess flood coverage that was available, and it's still available. But now, and that was to increase your coverage amount, right? So if you needed to have $750,000 in total coverage, you would have your primary policy with the NFIP, and then the excess would provide the additional coverage. With Flood Guard, we can offer the primary policy all the way up to $1 million in coverage. So I hope that answered the question.
Yes, thank you so much. And there's also one more question that came in just to finish up.
Sure.
Why would a condo on a higher floor need flood insurance?
Well, as Todd mentioned, the association of a condo building will cover the interior of the unit as it was originally built. And I understand that the higher up you are, the risk is a lot slimmer from experiencing an impact of flood. But hurricane winds are strong enough to blow windows open and cause water to come in. So in a case, it might be best to have hurricane insurance, and then the flood would be in excess of the association's policy.
Very good answer. Thank you so much, Karina. So that will bring an end to our question and answer section. If there's any that we missed, we'll be sure to address them and we'll get those answers out to all of you. And I'm going to turn the program back over to Kimberly. Kimberly.
Thank you, Shane. Well, thank you for those great questions. We appreciate all of you that have attended this morning and took the time out of your day to be here with us. This concludes today's webinar. If we did not address your question today, or if you think of additional questions, please contact our office or your agent for a free comprehensive review of your current insurance policies. We hope that this webinar has been helpful and that you leave with a better understanding of the different types of insurance coverage. Today, everyone in attendance will be receiving a link which will include the recording of the webinar, slides of the presentation, as well as the Q&A printout with any additional questions that came through. Thank you again and have a great day.